Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the recent price surge exceeding previous highs. The forecast price also projects continued growth over the next week, reaching potentially significant levels. This positive momentum suggests a bullish outlook for Bitcoin in the long term. Therefore, a long position is recommended. The entry price should be around $99,000, allowing for a potential dip before entering the market. A stop loss can be set at $96,000 to mitigate risk, while the target price should be set at $107,000, capitalizing on the predicted price surge. This strategy aims to capture the long-term growth potential of Bitcoin while managing risk effectively. Given the price trends and forecast for Bitcoin Cash, a moderately aggressive investment strategy would focus on a medium-term approach to capitalize on the anticipated upward movement. The historical prices show a fluctuating trend with an overall upward bias, while the forecast suggests a gradual increase in price over the next week. The support price at $450.50 indicates a potential floor for the price, while the resistance at $469.90 suggests a ceiling for the short term. In this scenario, a long position is advisable to take advantage of the potential price increase. An ideal entry price would be around $455, slightly above the support level, allowing you to enter the market at a relatively attractive price point. The stop loss should be set at $448, below the recent lows, to protect against any unexpected price drops. The target price could be set at $475, aligning with the forecast and offering a reasonable profit margin. This strategy allows you to participate in the potential upward movement of Bitcoin Cash while managing risk effectively. Based on the provided price information for stacks, a cautious investment strategy is recommended for the short term. The 2-week price history reveals a downward trend, and the 1-week forecast suggests further declines. While the support price at $1.503 offers a potential floor, the forecast's lowest point of $1.54 aligns with this level, indicating a limited potential for a significant rebound. Considering this bearish outlook, a short position is advisable. An entry price of $1.57, slightly above the current price, allows for a small margin of safety while still capitalizing on the potential for a price decline. The stop loss should be set at $1.616, the resistance price, to protect against an unexpected upward move. The target price could be set at $1.503, the support price, aiming to capture a portion of the anticipated decline. This strategy focuses on minimizing risk while seeking modest profits from the expected price correction in the short term. Based on the provided Ethereum price information, a medium-term investment strategy appears most suitable. The 2-week price change exhibits volatility, with both upward and downward movements. The forecast suggests a slight decline in the short term, but the historical price data also indicates periods of recovery and growth. Therefore, a long position is recommended, aiming to capitalize on potential upward momentum in the medium term. An appropriate entry price would be around $3,280, slightly above the recent lows and below the resistance level. A stop loss should be placed at $3,220, the support level identified by the system, to mitigate potential losses. The target price could be set at $3,470, aiming to capture the potential for a price increase towards the resistance level. This strategy allows for potential profits while managing risk through a well-defined stop loss. Given the price trends and forecast for Ripple, a medium-term investment strategy appears most suitable. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the support level of $2.5828. The forecast suggests further price increases, reaching as high as $3.67 in the coming weeks. This indicates a bullish outlook in the medium term. Therefore, a long position is recommended to capitalize on the potential for price appreciation. An ideal entry price would be around $2.60, allowing you to enter the market slightly above the current price and near the support level. The stop loss should be set at $2.55 to protect against any unexpected price drops. The target price should be set at $3.40, aligning with the forecast and offering a healthy profit margin. This strategy aims to capture the anticipated upward momentum of Ripple over the next few weeks. Given the price trends and forecast for Binance Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering around the support level of $688.86. The forecast suggests a continued downward trend, with prices potentially dipping below the current level. The resistance level is at $729.76, indicating a significant barrier to upward movement in the near term. Therefore, a short position is advisable to capitalize on the potential for a price decline. An entry price of $709, aligned with the current price, would be suitable. A stop loss should be set at $714, slightly above the current price, to protect against any unexpected price surges. The target price should be set at $690, anticipating a moderate decline towards the support level. This strategy aims to capitalize on the short-term bearish momentum while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Stellar, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate an overall upward trend, with recent fluctuations suggesting consolidation. The forecast prices indicate a continued upward trajectory, reaching potentially as high as $0.521 over the next few weeks. Therefore, a long position in Stellar is recommended for a medium-term investment horizon. An entry price of $0.465, slightly below the current price and above the support level of $0.4466, allows for a margin of safety while capturing potential upside. The stop loss should be set at $0.4466 to protect against a sudden price drop below the support level. The target price of $0.515, a conservative estimate based on the forecast, allows for substantial profit potential while leaving room for price fluctuations. This strategy aims to capitalize on the expected upward momentum of Stellar over the next few weeks while managing risk effectively. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $5.208. The forecast indicates further declines in the short term, but it suggests a potential rebound in the medium term. This suggests a period of consolidation before a potential upward movement. In this scenario, a long position is advisable, aiming to capitalize on the potential for a price increase towards the resistance level of $5.818. An entry price of $5.30 would allow you to buy in at a relatively low point, close to the support level. The stop loss should be set at $5.22, protecting your downside against further price declines. The target price should be set at $5.65, offering a reasonable profit margin while allowing for potential fluctuations in the market. This strategy allows for a medium-term investment horizon, capitalizing on the potential for a rebound in Toncoin's price while managing risk through a well-defined stop loss. Based on the provided Cardano price history, forecast, and support/resistance levels, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a general upward bias. The current price is hovering near the resistance level, suggesting a potential for consolidation or a slight pullback before continuing its upward trajectory. The one-week price forecast indicates a gradual increase in price, reaching around $1.15. Considering this, a long position would be advisable. An ideal entry price would be around $1.09, close to the current price and below the resistance level. The stop loss should be set at $0.992, the recent low point in the historical data, to minimize potential losses. The target price could be set at $1.1359, the resistance level, allowing for a moderate profit potential. This strategy capitalizes on the anticipated upward momentum while managing risk effectively. Based on the provided data for Litecoin, a medium-term investment strategy appears most suitable. The historical price shows a clear upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued growth, reaching $137 in the coming weeks. The support price at $104.35 provides a strong base for potential buy-ins, while the resistance at $136.94 presents a target for profit-taking. Therefore, a long position in Litecoin is recommended for a medium-term investment horizon. An optimal entry price would be around $115, aligning with the recent price action and offering a reasonable margin above the support price. To manage risk, a stop loss should be placed at $105, slightly below the support level. The target price could be set at $135, aiming for a substantial profit before reaching the resistance level. This strategy allows for capital appreciation while mitigating potential losses. Based on the provided Swaycoin price information, a medium-term investment strategy appears most suitable. While the historical price data exhibits some volatility, the forecast suggests a gradual upward trend over the next week. The entry price for this strategy should be set at $4.85, aligning with the current price and allowing for potential upside movement. The stop loss should be placed at $4.76, slightly below the recent lows, to minimize potential losses. The target price should be set at $5.25, reflecting the highest projected price in the forecast and providing a reasonable profit margin. This medium-term approach allows for capitalizing on the anticipated price increase while mitigating risk through a well-defined stop loss. The chosen timeframe avoids the extreme volatility often associated with short-term trading while capturing potential gains from the bullish forecast. Given the price trends and forecast for Aptos, a short-term investment strategy focusing on a long position seems appropriate. The historical prices show a general upward trend, with the current price hovering near the support level of $8.73. The forecast suggests a potential increase in price, reaching as high as $9.77, aligning with the historical resistance. This indicates a bullish outlook in the short term, making a long position a potentially profitable strategy. For this strategy, an entry price of $9 would allow you to buy in at a relatively attractive price point, considering the forecast and the proximity to the support level. A stop loss of $8.75 would protect your investment against a sudden drop in price, while a target price of $9.50 would allow you to capitalize on the potential upside momentum. This strategy aims to take advantage of the short-term bullish trend in Aptos, aiming for a quick profit before the price potentially corrects or consolidates. Based on the provided price information for SE, a cautious short-term investment strategy is recommended. The 2-week price history demonstrates a downward trend, and the forecast predicts further declines. Although the support price at $0.3761 offers a potential floor, the resistance at $0.3989 suggests limited upside potential. Given these factors, a short position appears more favorable. For this strategy, an entry price of $0.390 would allow for entry near the current price and above the support level, providing a buffer against unexpected price surges. A stop loss at $0.3989, slightly above the entry price, would protect against potential losses if the price unexpectedly rises. The target price should be set at $0.3761, aligning with the support level and offering a realistic profit target. This approach aims to capitalize on the anticipated downward movement while minimizing risk. Based on the provided Ethereum Classic price information, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price change reveals a slight downward trend, and the forecast indicates further consolidation around the $26 price level. While the support price sits at $25.98, the resistance at $28.30 suggests limited upward potential in the near future. Therefore, a short position with an entry price around $27.20, slightly above the current price and the forecasted average, is recommended. The stop loss should be set at $27.80 to minimize potential losses if the price unexpectedly rises. The target price could be set at $25.98, aligning with the support level and allowing for a reasonable profit margin. This strategy capitalizes on the anticipated consolidation and potential for a slight price decline, while managing risk through a well-defined stop loss. Based on the provided Polygon price history and forecast, a cautious short-term investment strategy appears most suitable. While the recent price history shows some volatility, the forecast indicates a downward trend in the coming week. The current price is relatively close to the support level of $0.4748, suggesting a potential for further decline. Therefore, a short position on Polygon is recommended, aiming to capitalize on the anticipated price decrease. An entry price around 48 cents could be considered, with a stop loss set at 49 cents to limit potential losses. The target price could be set at 45 cents, aligning with the forecast and allowing for a reasonable profit margin. This strategy prioritizes risk management by implementing a stop loss and focuses on a short-term opportunity within the projected price range. Given the current price trend and the forecast for AEVO, a short-term bearish strategy appears most suitable. The historical price data shows a downward trend over the past 2 weeks, with the forecast predicting further declines. The price is currently hovering near the support level of $0.3069, indicating a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve taking a short position on AEVO. A suitable entry price would be around 33 cents, aligning with the current price and the potential for further decline. The stop loss should be set at $0.343 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.308, slightly above the support level, allowing for a reasonable profit margin while mitigating the risk of a deeper price drop. Given the provided price history and forecast for optimism, a cautious investment strategy leaning towards the short side appears more suitable. The historical price data reveals a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast further suggests a continued downward movement, with prices potentially dropping below the current level. Therefore, a short position with a conservative approach is recommended. An entry price around $1.82, slightly above the current price, allows for a buffer against potential temporary price increases. The stop loss should be set at $1.89 to minimize potential losses if the price unexpectedly surges. The target price could be set at $1.73, aligning with the support level and offering a reasonable profit margin. This strategy prioritizes risk management while aiming to capitalize on the anticipated downward price movement. Given the provided information on STRK, a cautious investment strategy would be recommended for the medium term. The historical price data reveals a fluctuating trend with a slight downward bias, while the forecast suggests a continued decline in the coming weeks. Although the support price at $0.4111 offers a potential floor, the resistance at $0.4288 indicates limited upside potential in the near future. Therefore, a short position is advisable to capitalize on the potential for further price decline. An entry price around $0.425, slightly above the current price and below the resistance level, would allow for a risk-reward balance. The stop loss should be placed at $0.435 to mitigate potential losses if the price unexpectedly rebounds. The target price could be set at $0.405, aligning with the forecast and offering a reasonable profit margin. This medium-term strategy aims to profit from the anticipated price decline while managing risk through a well-defined stop loss. Given the historical price data for Solana, which shows a generally upward trend, and the bullish forecast indicating continued price growth, an investment strategy focused on a long position seems appropriate. This strategy aligns with the medium-term investment perspective, aiming to capitalize on the anticipated upward momentum of Solana. A suitable entry price for this strategy would be around $215, close to the recent historical price and below the first forecast price of $223. The stop loss should be set at $205 to protect against potential downside risks. The target price could be set at $260, reflecting the potential for substantial price appreciation based on the forecast. This strategy allows for a balance between risk and reward, aiming to capture significant gains while mitigating potential losses. Based on the provided price information for Jupiter, a medium-term investment strategy appears most suitable. The historical price data shows a volatile trend with significant fluctuations, suggesting potential for both upward and downward movements. However, the forecast price indicates a general upward trajectory over the next week, suggesting potential for profit in the medium term. Therefore, I recommend a long position on Jupiter with an entry price around $0.830. This price point is slightly below the current price, allowing for a margin of safety. The stop loss should be set at $0.790 to protect against unexpected price drops. The target price should be around $1.000, aligning with the forecasted price and offering a potential profit of approximately 20%. This strategy allows for capitalizing on the anticipated upward trend while mitigating risk through a well-defined stop-loss order. Based on the provided historical price data and the forecast for render, a short-term investment strategy appears most suitable. The recent 2-week price change shows a downward trend, aligning with the forecast which predicts further declines. While the support price sits at $6.793, the forecast suggests a potential drop to as low as $7.37. This indicates a bearish outlook in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on render. A suitable entry price would be around $7.46, aligning with the current price and the forecasted decline. The stop loss should be set at $7.64 to protect against any unexpected upward price movement. The target price could be set at $7.04, slightly above the forecasted lowest price, allowing for potential profit taking before the market potentially reaches significant support. Based on the provided information for Solana name service, a short-term investment strategy appears most suitable. The recent price history reveals a downward trend, with the forecast indicating further declines. While the support price is at $0.2441, the forecast suggests a potential drop towards $0.228, indicating a bearish outlook in the short term. Therefore, an aggressive short-term strategy would involve taking a short position. An ideal entry price would be around 24 cents, slightly above the current price, allowing for a potential price drop before entering the position. A stop loss could be placed at $0.252, mitigating risk if the price unexpectedly rises. The target price should be set at 22 cents, capitalizing on the forecasted decline while leaving room for market fluctuations. This strategy aims to profit from the anticipated price decrease in the short term, leveraging the current bearish sentiment surrounding Solana name service. Based on the provided Doge-Coin price information, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent upward movement suggesting potential for further gains in the near future. The forecast price also indicates continued upward momentum, with prices projected to reach around $0.418. Considering this, an investment strategy for Doge-Coin would involve taking a long position. A suitable entry price would be around $0.386, aligning with the current price and the forecast. The stop loss should be set at $0.356 to mitigate risk in case of a sudden price decline. The target price could be set at $0.418, capitalizing on the projected price increase. This strategy aims to leverage the short-term bullish sentiment and capitalize on the potential for price appreciation in the coming days. PEPE shows a volatile price pattern over the last 2 weeks with a recent dip. While the forecast suggests a slight decline in the coming week, the historical data reveals a fluctuating price range. Considering the support price at $0.0000169 and the resistance price at $0.0000193, we can identify a potential short-term trading opportunity. A cautious approach with a short-term investment perspective is recommended. An entry price around $0.0000182, near the current price and slightly above the support level, would be suitable. The stop loss should be set at $0.0000185 to minimize potential losses if the price unexpectedly surges. The target price could be set at $0.0000171, aligning with the recent price dip and offering a reasonable profit margin. This strategy aims to capitalize on the anticipated short-term price decline while managing risk effectively. Remember, cryptocurrency markets are highly volatile, and thorough research and risk management are crucial before making any investment decisions. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a medium-term approach. The historical prices show a recent consolidation pattern, with the current price hovering near the support level of $0.0000212. The forecast suggests a slight upward movement in the coming week, but the resistance level of $0.0000322 remains distant. This indicates a sideways to slightly bullish outlook in the medium term. A long position could be considered, aiming to capitalize on the potential for a price increase towards the forecast high. An entry price around $0.0000218 would allow you to enter near the current price level. A stop loss at $0.0000212, aligning with the support level, would protect against significant downside movement. The target price could be set at $0.0000232, aligning with the forecast high and providing a reasonable profit target. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Given the price trends and forecast for DOG-COIN, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $1.493, indicating a potential floor for the price. However, the resistance at $1.818 suggests limited upside potential in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $1.77, aligning with the recent price action and the forecast. The stop loss should be set at $1.818 to protect against any unexpected price recovery. The target price should be set at $1.50, slightly below the support level, allowing you to take profits before the market potentially bounces off the support. Based on the provided price information for Doge-Coin, a short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, aligning with the 1-week price forecast that predicts further declines. The current price hovers near the resistance level of $0.006215, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve taking a short position at the entry price of $0.006215, aligning with the resistance level. The stop loss should be set at $0.00644 to minimize potential losses if the price unexpectedly rises. The target price would be $0.00586, slightly above the lowest forecasted price, allowing for profit taking before the market potentially finds support at the support price of $0.004885. The historical price data for NEAR protocol reveals a fluctuating trend over the past 2 weeks, with a slight downward bias. While the forecast suggests a continued downward movement in the short term, the price remains relatively close to its support level of $5.365. Considering this information, a short-term investment strategy focusing on a short position appears prudent. An ideal entry price for this strategy would be around $5.30, allowing for a small margin above the support level. The stop loss should be placed at $5.44, slightly above the recent high, to minimize potential losses. The target price could be set at $5.15, anticipating a decline towards the lower end of the forecast range. This strategy aims to capitalize on the short-term bearish sentiment while mitigating risk through a well-defined stop loss. Given the historical price data and the forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, and the forecast indicates further declines. The support price is at $9.79, which could act as a potential buying opportunity if the price rebounds. However, the resistance level at $10.684 suggests limited upside potential in the near term. Therefore, a short position appears more suitable for capitalizing on the anticipated price decline. An entry price of $10 would allow for a potential profit as the price moves towards the support level. The stop loss should be set at $10.30 to protect against any unexpected price surges. The target price should be $9.80, aiming to capture a portion of the potential downside movement before reaching the support level. This strategy allows for risk management while aiming to profit from the predicted bearish trend in Internet Computer. Based on the provided price history and forecast for Injective, a cautious investment strategy favoring a short-term approach appears most suitable. The 2-week price history reveals a slight downward trend, with the forecast suggesting a continuation of this downward movement. Although Injective is currently hovering near its support price, the forecast indicates a potential drop to around $23, creating a window of opportunity for a short position. Therefore, an aggressive short-term strategy could involve entering a short position at the current price of $24, with a stop loss set at $24.81 to minimize potential losses if the price unexpectedly surges. The target price should be set at $20.18, aiming to capitalize on the predicted price decline and reach the support level. This strategy prioritizes risk management while seeking to capitalize on the anticipated downward price movement of Injective in the short term. The provided price history and forecast for BTC indicate a potential for short-term profit through a short position. While the recent 2-week price change shows some fluctuations, the forecast suggests a downward trend over the next week. The price is currently hovering near its resistance level, making it a suitable entry point for a short position. A conservative strategy would involve entering a short position at $460, the first price in the forecast. The stop loss should be set at $486.60, the resistance level, to protect against unexpected upward movements. The target price could be set at $441.80, the support level, aiming to capture a significant portion of the potential price decline. This strategy capitalizes on the anticipated short-term bearish trend while managing risk effectively. Given the price trends and forecast for THETA network, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $2.155. The forecast indicates a further decline in the coming week, suggesting potential for short-term profit. However, the resistance level at $2.386 indicates that a significant upward movement is unlikely in the near future. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $2.29, the recent closing price. The stop loss should be set at $2.386, the resistance level, to limit potential losses. The target price should be set at $2.155, the support level, allowing you to take profits before the price hits major support. This strategy aims to capitalize on the short-term bearish momentum while managing risk effectively. Given the price trends and forecast for WorldCoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $2.129. The forecast suggests WorldCoin might continue to decline slightly in the coming week, reaching as low as $2.07. However, the resistance price of $2.31 indicates that significant upward movement is unlikely in the near future. Considering these factors, a short position is recommended for a short-term investment strategy. An entry price of $2.20 would allow you to capitalize on the potential for a price decline towards the forecast low. A stop loss at $2.25 would protect against any unexpected upward movement. The target price should be set at $2.08, aiming to capture a decent profit before the price potentially rebounds from the support level. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near the support level of $0.3532. The forecast indicates further declines, suggesting that Hooked Protocol could drop to as low as $0.337 in the coming week. While the resistance level is at $0.4044, indicating limited upside potential, the combination of the downward trend, forecast, and proximity to support suggests a higher probability of a continued decline. Therefore, a short position is recommended to capitalize on this anticipated price decrease. An entry price of $0.372, slightly above the current price, allows for a buffer against immediate fluctuations. The stop loss should be set at 38 cents, mitigating potential losses if the price unexpectedly rebounds. The target price should be set at 34 cents, slightly above the forecasted lowest price, allowing for profit-taking before the market potentially finds support. This strategy aims to capitalize on the short-term downward momentum while managing risk through a well-defined stop loss. Based on the provided Artificial Superintelligence Alliance price history and forecast, a short-term bearish strategy appears most suitable. The 2-week price history demonstrates a consistent downward trend, with the recent price hovering near the support level of $1.298. The forecast predicts further declines, reaching as low as $1.27 in the coming week. This suggests a limited potential for upward movement in the short term. Therefore, a short position on Artificial Superintelligence Alliance is recommended to capitalize on the anticipated price decline. To execute this strategy, an entry price of $1.34 would be appropriate, aligning with the current price and the predicted price movement. A stop loss at $1.362, slightly above the current price and the resistance level, would safeguard against unexpected upward surges. The target price should be set at $1.29, a conservative level that allows for profit-taking before reaching the strong support level. This strategy aims to capitalize on the short-term bearish momentum of Artificial Superintelligence Alliance while mitigating potential risks through a well-defined stop loss. Polkadot's recent price history shows a fluctuating trend, hovering around the $6.70 range. The forecast suggests a slight decline in the coming week. Considering the historical price data and the forecast, a short-term strategy with a short position seems appropriate. The current price is near the resistance level of $7.54, indicating a potential for a pullback. Entering a short position at $7.10, slightly below the current price, allows for capitalizing on the potential decline. The stop loss should be set at $7.30 to mitigate risk in case the price unexpectedly rises. The target price could be set at $6.50, aligning with the support level and the forecasted price decline. This strategy aims to profit from the anticipated short-term downward movement of Polkadot, while managing risk effectively. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short to medium-term approach. The historical prices show a recent period of volatility, with a slight downward trend in the past 2 weeks. While the forecast suggests a potential for slight recovery, it remains relatively flat, indicating a lack of strong upward momentum. The support price at $4.928 suggests a potential floor for the price, while the resistance at $5.85 presents a significant barrier for further upward movement. In this scenario, a long position could be considered, but with a cautious approach. An entry price around $5.20 would allow you to buy in near the current price, while leaving room for potential price fluctuations. The stop loss should be set at $4.95 to protect against a further decline below the support level. The target price could be set at $5.60, aiming to capitalize on a potential recovery towards the resistance level. This strategy allows for a moderate risk-reward ratio, taking advantage of potential upside while mitigating potential losses. Based on the provided price information for Conflux, a cautious investment strategy focusing on a short to medium-term perspective appears most suitable. The historical price data reveals a recent downward trend, with the price fluctuating around 14 cents to 17 cents. The forecast suggests a further decline in the coming week, with prices potentially dipping below 16 cents. Given this bearish outlook, a short position would be advisable. An entry price of $0.165 aligns with the current price range and the anticipated downward movement. A stop loss should be set at 17 cents, slightly above the current price, to minimize potential losses if the price unexpectedly rebounds. The target price can be set at $0.155, anticipating a moderate decline in the coming weeks. This strategy aims to capitalize on the short-term bearish trend while managing risk through a well-defined stop loss. Based on the Ethereum name service price history and forecast, a short-term investment strategy appears prudent. The price has fluctuated recently, hovering around the support level of $30.89. The forecast suggests a slight dip in the coming week, with prices potentially reaching around $32. Considering this, a short position could be beneficial. An entry price of $33, aligned with the current price, would allow for a quick entry into the market. A stop-loss order at $34.76, the resistance level, would limit potential losses if the price unexpectedly surges. The target price could be set at $30.89, the support level, aiming to capture a potential price decline. This strategy capitalizes on the anticipated short-term price movement while managing risk through a well-defined stop-loss order. Based on the provided information for Avalanche, a short-term investment strategy appears most suitable. The 2-week price history demonstrates a slight downward trend, with the forecast suggesting further declines. While the support price sits at $37.74, the resistance level at $41.47 indicates limited upward potential in the near term. This bearish outlook, coupled with the forecast, suggests a potential for profit from a short position. Therefore, an aggressive short-term strategy would involve entering a short position at $39, aligning with the current price and the projected decline. The stop loss should be placed at $40, safeguarding against any unexpected price surges. The target price would be $37.50, aiming to capitalize on the anticipated price drop while leaving room for potential market fluctuations. This strategy prioritizes capturing short-term gains within a volatile market. Given the price trends and forecast for Bitcoin, a medium-term investment strategy appears most suitable. The historical prices show a recent dip followed by a slight recovery, indicating potential for further upward movement. The forecast suggests a gradual increase in price over the coming weeks, with Bitcoin potentially reaching around $0.0535. The support price of $0.04687 provides a safety net, while the resistance at $0.05304 indicates a ceiling for the immediate upward movement. Therefore, a long position is recommended to capitalize on this potential. An aggressive entry point could be around $0.0492, aligning with the initial forecast price. A stop loss should be set at $0.04687 to minimize potential losses if the price drops below support. The target price should be set at $0.05304, aiming to capture the majority of the potential upward movement before encountering resistance. This strategy allows for a balanced approach, leveraging the potential for growth while managing risk within a defined timeframe. Given the price trends and forecast for PENDLE, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $3.714, acting as a potential floor for the price. However, the resistance at $5.084 suggests limited upside potential. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $4, aligning with the current price and recent historical lows. The stop loss should be set at $4.20 to protect against any unexpected price recovery. The target price should be set at $3.60, slightly above the support price, allowing you to take profits before the market potentially bounces off the support level. This strategy aims to capitalize on the short-term bearish outlook for PENDLE while managing risk through a defined stop loss. The sandbox's recent price history shows a fluctuating trend with periods of both increase and decrease. The forecast suggests a potential decline in the short term, with prices hovering around the support level. Considering these factors, a cautious approach is advisable for the sandbox. A short-term investment strategy with a focus on the short side could be beneficial. The entry price for this strategy would be around 62 cents, aligning with the current price and the potential for a slight dip. The stop loss should be set at 64 cents, slightly above the entry price, to limit potential losses. The target price would be 58 cents, anticipating a moderate decline towards the support level. This strategy allows for potential profit from a short-term price correction while minimizing risk through a well-defined stop loss. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a medium-term approach. The historical prices show a downward trend, with the current price hovering near the support level of $0.4758. The forecast suggests Decentraland could potentially fluctuate within this range for the next week, with a slight downward bias. The resistance at $0.5921 is relatively distant, indicating limited upside potential in the near term. Therefore, a medium-term short position is recommended to capitalize on the anticipated price consolidation and potential for a decline towards the support level. The entry price could be set at $0.515, slightly above the current price and within the recent trading range. The stop loss should be placed at $0.534, above the recent high and the first resistance level, to limit potential losses. The target price could be set at 48 cents, below the support level, allowing for a reasonable profit margin while acknowledging the potential for further price drops. Based on the provided price history and forecast for ENG coin, a cautious short-term investment strategy appears most suitable. The historical prices show a downtrend, with the forecast indicating further declines over the next week. The current price is close to the support level of $0.1911, suggesting a potential for further downward movement. Therefore, a short position is recommended to capitalize on this anticipated decline. An aggressive entry price would be around $0.204, aligning with the recent price action and the forecast. The stop loss should be placed at $0.213 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.185, which is slightly above the lowest forecasted price, allowing for profit taking before the market potentially reaches the support level. This strategy aims to capitalize on the short-term bearish outlook for ENG coin while managing risk through a defined stop loss. Based on the provided information for Uniswap, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with no clear upward or downward momentum. The forecast suggests a slight decline in the coming week, hovering around the support price. This indicates a potential for short-term profit by capitalizing on the expected price dip. Therefore, an investment strategy for Uniswap would involve taking a short position. The entry price could be set slightly above the current price, around $14, to account for potential short-term fluctuations. The stop loss should be placed at $14.50, safeguarding against any unexpected price surges. The target price would be set at $13, aiming to capture the potential decline as indicated by the forecast. This strategy leverages the short-term bearish outlook while managing risk through a well-defined stop loss. Given the price trends and forecast for Chainlink, a medium-term investment strategy appears most suitable. The historical prices show a slight downward trend over the past 2 weeks, but the forecast indicates a potential reversal and upward movement in the coming week. The support price of $21.78 acts as a potential buying opportunity, while the resistance price of $25.18 presents a potential selling opportunity. Therefore, a long position is recommended, aiming to capitalize on the anticipated price increase. An entry price of $22, slightly above the current price and below the resistance, would be ideal. The stop loss should be set at $21.80, close to the support price, to minimize potential losses. The target price should be set at $24.50, allowing for a reasonable profit margin before reaching the resistance. This strategy balances risk and reward, taking advantage of the potential for price appreciation in the medium term while mitigating potential downside risks. Given the current price trends and forecast for Aave, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent decline, and the forecast suggests further consolidation around the $315 to $330 range. The support price sits at $288.81, indicating a potential floor for the price. However, the resistance level at $319.92 suggests that significant upward momentum might be limited in the near term. Therefore, a short-term bearish strategy would involve entering a short position at the current market price, with a stop loss placed slightly above the recent high around $334. This stop loss would protect against any unexpected upward price movements. The target price could be set around $290, aiming to capture a potential decline towards the support level. This strategy capitalizes on the anticipated consolidation and potential downward pressure in the short term. Based on the provided price information for EOS, a cautious investment strategy focusing on the short term appears most suitable. The historical price data shows volatility, with a recent downward trend. While the forecast predicts a slight recovery, the price is still close to its support level of $0.8697. Entering a long position at this point carries significant risk as the price could potentially drop further. Therefore, a short-term short position is recommended. An entry price of $0.900 could be considered, slightly above the current price, allowing for some room for price fluctuation. The stop loss should be set at $0.936, the highest recent price point, to protect against unexpected upward movement. The target price could be set at $0.875, aligning with the forecast and providing a reasonable profit margin. This strategy aims to capitalize on the potential for a short-term price decline while managing risk through a well-defined stop loss. Given the provided historical price data and the one-week forecast for Tron, a short-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a downward trend, with recent fluctuations suggesting a possible continuation of this downtrend. The forecast also indicates a bearish outlook for the next week, with prices potentially dropping below the current levels. Therefore, a short position on Tron is recommended. An entry price around $0.238, aligning with the current price and the forecast's initial dip, would be appropriate. A stop-loss order should be placed at $0.249 to limit potential losses if the price unexpectedly reverses. The target price could be set at $0.2071, the support price, aiming to capitalize on the anticipated decline. This strategy capitalizes on the short-term bearish outlook for Tron, aiming to profit from a potential price drop towards its support level. Based on the provided Suncoin price history and forecast, a cautious short-term investment strategy appears most suitable. The recent price trend shows a downward movement, with the forecast indicating further declines. Although the support price is at $0.02256, the forecast suggests Suncoin could drop to $0.0222. This indicates a bearish outlook in the short term. Therefore, a short position is recommended to capitalize on the anticipated decline. An entry price of $0.0231, slightly above the current price, allows for a buffer against immediate price fluctuations. The stop loss should be set at $0.0237 to minimize potential losses if the price unexpectedly rises. The target price should be set at $0.0226, aligning with the lowest forecasted price, allowing you to secure profits before the market potentially reaches its support level.